All right, guys. Hey, good morning to you. Lots of action to look at today. I've got in front of me this reference chart that I've been using for the last many weeks now. This is our 4 hour of Bitcoin to the dollar on Bitstamp. Now, I know this is an absolute mess, and I'm going to strip this bare so we can get a better look at it. But I just wanted to, before I started tearing it off, show you, kind of these key levels here. This, of course, has been just a perfect pivot here for this high. We can see the intersection of the median line here. We had the outside edge. That's the 200% of the median line from these lower pivots. And then we had our nice fib swings here, where we had the 61865 here, which went to target, and then we had again the 618 to the 65, which went here. This green line here is that target. So a big cluster here of price pattern and structure to suggest that we had a high there. And now we've started this correction of this last swing. So how we're going to end up labeling this on this longer term chart, well, I'm not sure we have enough to put a hard count on it yet, but we can see we're certainly in some sort of an impulsive move here, and then we're correcting in some fashion here. The depth of this remains to be seen. We're going to go to a smaller time frame, but let me pull this off and start to take some of this off. Since we know those levels, that's why I encourage you to draw those boxes so you know they're meaningful. If you needed to, you could go back and recreate them. So here you can see that now we've gone deep on this last correction. So from here to this high, we went just shy of the 786, which would suggest potentially we've got one of two things. Either this is a 1-2. We have the potential for, we've got a few scenarios here. We could have this be an A, this be a B because of it's a three-wave structure. Down on a 15, we can get a 5-wave on it, but it's not the cleanest 5-wave I've ever seen. It's a very shallow 2, which is uncharacteristic. So we have the possibility for this to be an expanded flat, for an A, B, and a C wave to be in here now. So if you were going to just check that, you would just simply alternate price projection. If that is an A, and this is our high here, we'd be looking for something around the 100% to the 1272, and we're kind of in between. So yesterday we looked at that swing low, and we saw that it had a nice 1618 to the tick swing, which we'll get there in a minute. But I just wanted to give you that as, there are always a few possibilities. So you have to consider alternates along the way. Right now, Elliott wave aside, we've got an internal retracement of this swing, and we are still internal here to this swing high to low. All right, so as to where this plays, and what we end up getting, remains to be seen. It's a little too early to be definitive about this. So as I will always tell you, when you're in doubt, pull the Elliott wave off until you get more clarity, and just start pulling fib swings. And that will enable you to get a handle on where you likely are in the count. Now, of course, with the kind of pivots that we have here, first thing I'm going to do is that my high? There's my high. First thing I'm going to do is put a pitchfork on it. Now I've got the modification on that. So let's go back to original. So we can get a sense of potential targets up here. So do we have any overlap? Well, this is kind of interesting up over here. I've got this still as potentially a Y wave. So, this gives us, see, the other advantage of the pitchfork is that it adds a time element. So look up here. So we have these potential intersections of price and time. Now this is, of course, got to be pulled way over. So we get this time component as to right now the probability is that we're going to hit the median line. So when we draw this, you have an 80% probability if you stay within this channel of hitting the median line. Algos like it, they use it, so that's a potential target. But you see, it becomes a question of when we get there. So the ideal time would be right here, okay, which puts it, what's the date there? 10/28, so 2 days. Now this is a 4-hour chart. for all we know, we're going to be there today, the way Bitcoin moves. But first, we got to come up and challenge this high and get to and through it. And there's likely to be some resistance up there to get to it. So one of two things happen. Either it stalls there, you get a little stop running, and then it retraces, or it hits it, you stall, and then they use the stops that that are sitting up above that, and that becomes the fuel to get to new highs. So we have a reasonable target here with no Elliott wave, just using fibs and some structure, some market geometry with the pitchforks. And then of course we do have this outside edge here, which allows for other potential intersections that could be interesting points of note. So that's I always suggest that you start drawing boxes. That way, if you want to pull things off, you can go back and that's an important area, and you can always go back and recreate it, or maybe reevaluate and say, I know that was important. If I've pulled things off my chart, let's see if I can recreate it and see if it still makes sense with what I'm seeing here in the market. So this also, I mean, you have a couple of different patterns here. So you have potential harmonic patterns forming here. You have a potential head and shoulders forming here. So there's a lot of different ways that this can go. But at our most fundamental evaluation, we're in a bull market. So right now we're getting higher lows. So no reason to anticipate that to change until we see evidence to the contrary. So right now, low, higher low, higher low, higher high, higher high. Anticipation would be a higher high. So we've got a nice target up here at 64.35-ish, right, depending on your exchange. I mean, we got, additionally up here at 66.85, and then we've got some larger ones up here. This would be the negative 618. All right, look at this range here. So here's the negative 618 of this pull. Right, we went a little deep. We went through our 61865 box, but we held above the 786. So that's where I've got my negative 23, my negative 618 of that, and then we have the much larger negative 618 from the pull way down here. So here was the 23, here's the negative 618. So you get an additional cluster up here to be conscious of and be looking for. So a series of potential resistance points or targets as the market starts to move. All right, so how we end up labeling this long term, isn't as important to us right now. So particularly if you're trading off of a 4-hour, which unless you're able to spend a lot of time on the smaller time frames and are comfortable consistently relabeling, as is just the nature of trading off of the smaller time frames. Most of the trading that I do will be off of a 4-hour chart so I don't have to mess with all of that. But I do it partly because I enjoy it, partly because of the intellectual challenge of seeing if you can figure out the puzzle. But if you're just trading this from the longer term basis, you really don't have to mess with that, and it will simplify it for you. So right now on a 4-hour chart, there's no reason to anticipate anything other than the hitting of this target. So let's go down to a smaller time frame and see if we can get a handle on potentially the timing of that. So I'm down to the 15-minute, which has been relabeled multiple times. So at this point, here's as I was showing you, but potentially this is a 5-wave sequence here. We have all the characteristics. 3 is not the shortest. We get an extended 5. We have these big moves that then we get these very shallow retracements because there's just such incredible demand for Bitcoin. So retracements are shallow and they're being absorbed quickly, and then we go into all right. So what happens here? The fork. The fork causes this. So FUD, uncertainty, doubt, stops get hit that push it down. So I've got a count on here on this now that I think works. So I've got us in an ABC. It plays, all of the Elliott rules can apply here. It all works. We had this pivot here. I'll show this to you again if you didn't see it from yesterday. So I just pulled from my B wave to my 1 low, went to the 2 high here, and you see we went right to the 1-6-1-8, very common swing relationship here. So that's why we stopped there. For whatever reason, algos were using that and they just ripped it higher. So we know we've got a good pivot to work from there. So let me take that off. Now coming back, note here, you would think, okay, well, if I've got a hard pivot here, my ABC is done, well, then I'm looking for an impulse. I'm looking for that impulsive one way. Well, we don't get it. We don't get it. And much like on the larger time frame when we started this entire impulse, we did not get a true impulsive 1. We got a 3 wave. So the only time a 3 wave per Elliott rules can be a 1 wave is when you're in a diagonal, and this does not appear to be diagonal, nor does it appear to be diagonal on the longer time frame. So at this point, all I can do is call that an ABC. We get a little B down here, and we're in some sort of 5-wave structure. Well, okay, Elliott aside, if I pull back here again, what can we say with certainty? Well, we're internal to this correction here. We're internal to that move, and we remain internal to this move. So we're sitting right at the, I think we're right at the 786. So if I draw it from the high to the low, here's our 786. So we got a little cluster here. So we've got the negative 618 of lower pulls. We've got the 786, and we're running out of steam there. Now nothing says this doesn't just blow through and just go much higher. It certainly, has that characteristic, but it's not terribly surprising that we're running into a little resistance here. We've had this extension in the 5th. So you can see here we've got. Let me strip it a little bit so you can see it better. Let me pull this off and try and recreate. Again, the box is there, so we know we've got a significant point, if nothing else, let me get that off, from our swing high to low. So we get a nice little, here's a 1-2. I tried to buy this morning at the 382, and I didn't get filled. That's, just goes with the territory. I just had this set up here. I was trying to get filled down here at the Vegas wave. Didn't give it to me. Right? It's frustrating, right? Because then, of course, as is often the case, the better your trade is, the more likely, if you don't get filled, it's going to rip away from you. That's just characteristic. Welcome to trading. That just happens all the time. So you just, you let it go and you reevaluate and say, okay, next trade. So where are we likely here now? So we're running into this resistance. We have a potentially completed ABC. If I look at more typical swing relationships, well, of course, I'd want to measure my A wave. I got it there. My A wave from my B low. Well, we've gone to and through the 1618, 175. We've got some up. Here's the -1, and then we've got the 2618 up here. So if we're going to go that far, right? Look how notice how we're sitting up here to challenge those highs at the 2618, which would be an extreme off of this move, this A from the B low. So that would be extreme. We may end up relabeling, but right now that looks like we've run into a logical place to hit some resistance here. So thus we draw the box and we come right to it. All right, let's pull a little bit of this off again, knowing we've got some upside targets and we've just gone to the -618. So what do we do now? Well, we just again trying to keep it simple. Well, here's my last swing low before I go into a potentially completed 5-wave sequence, currently labeled as a B wave. I'm going to go up to that high. And I'm going to look, any help here in the oscillators? Well, we certainly got hot on the RSI. We don't have divergence yet here. If you look, let me see if I can get it over here. If you look to the left here, if I put the crosshairs on it, we're not quite to that high. So, we're softening a little bit. It wouldn't surprise me to see a pullback here. So if it's going to pull back and we're looking for our next entry, well, the first place to start would be right here. What's a likely target? Well, of course, we're going to look for the 50, which happens to be lining up right with the Vegas wave. So that's a contender. This is just what you have to do if you're trading if you're evaluating off the 15-minute. Now we had a couple of swings here that were interesting, which I always marked these. So this was our A low. We ran into a little resistance there. And then the reason it's always worthwhile to keep these significant swings on the chart. That's why I just draw them and just let them extend to the right. Previous swing high here, and you'll notice that right in that area we ran into some resistance as we had done previously. So there's the shallow pullback. That's why I was looking for that trade, because I thought we'd hit some resistance there. Also, take note, we're right back to the 50 of the high to the low. So you had a lot of things suggesting likely resistance there, and the reasonable spot to look for an entry would have been the 382, which just as I just showed you, lined up with the Vegas wave. So that was a place to be looking for a new long. long, and sometimes you get filled, sometimes you don't. So up we go. Now we sit and we draw the box down here and say, okay, well, that was a previous area of what we'll call it indecision. So there's the 382 right here at the previous swing high. So again, just practices to that I try and show you that are worthwhile. So I draw that little box right there. So we have this nice little cluster here. I got a lot of things happening right here. I have this little, here's my 3 to 4. So if it's going to retrace, first retracement zone is typically that range between the 3 and the 4, even as shallow as that is for that 4. These are all potential pockets here. So if you pull this down, you got a nice little zone here. So maybe you're on the front end of it with a partial, looking for partial entry here at the 382. You keep a little in reserve to try and get the 50, and your stop would be down here below the 65. So again, it's just a process of letting the market show its hand. Now we've got a nice clean 5-wave sequence. We stall up here at a resistance point that we can evaluate and say, well, that makes sense that it would stall there. Now, what's next? This is a gift if we get it. Doesn't mean it's going to be a winner. Doesn't mean we don't just continue to rip, because we don't know, because we might come down here, stall, and just keep going, because remember, we are still, you have to consider this as the alternative. We're still internal here. Here's the 786. Here's the negative 23 target. So this could still play as some sort of an, if we're going to simplify, A, B, C. We still have that as a contender. So no reason to be riding down deeper if we go that way, because we can't be absolute about this, particularly on a 15-minute. So remember, as I showed you on the larger time frame, if we go back over here, I mean, nothing says that we aren't just doing this, that we aren't just going A, B, and we're going down for a C. That makes perfect sense. So if I take this off, let me get rid of some of this just to clear up the chart. And this is, again, some of the benefit of working off the larger time frame. Now we're all, our eye goes up here because we're all bullish. We want to see new highs, new highs, new highs. But you have to allow for that. So if that, because we certainly have a completed sequence here down into this low, as we just saw in the 15-minute. So what would you expect for the B wave? Well, you'd expect something around the between the 618 and the 75, or pardon me, and the 786. So going here, this is absolutely a contender. We could just be putting that in. Now, look here, we're a little shy of the outside edge here, but we could easily be doing that. Now, we put the wave on it, and you look at it and you say, well, yeah, that makes absolutely perfect sense. Here's our negative 23 of that pull. So A, B, potentially, B, then down to a C. That certainly is a contender. Look how it plays to the outside edge here, as is common. I'm going to take this one off. As is common from one edge, median line, we go through, but the 75 keeps it. Back up, the push here, not getting to the outside edge here, actually sets up the potential. You would consider that a failure to reach this blue edge here of the dominant pitchfork, right, on the inside here. That's the 100%. That failure sets this up as a contender. Well, if it did that, would that make sense? Well, if we just go back here to this last pull, go up to our high, look at that. So you see that? So there's your 50% of the entire move lining up with the negative 23. So you have to, that's why, if you're going to use Elliott wave, because, again, I hate to use the cliche, but because, or the pun, because the waves are fluid and are changing all the time based on how the market responds, you have to have an alternate count. So that is an absolutely valid alternate. It makes absolutely perfect sense. Could easily be putting that in, but we don't know. So how do we know? Well, we got to see do we go up and challenge these highs? It'll be interesting to see. Remember, over here we have the potential for this to be done. 1, 2, 3, shallow 4, up for the 5. We stall, and look, we're starting to retrace here. So, does that mean I'm not going to take this? No, absolutely, I'm going to take that. But I'm comfortable because I can look at that and say, well, what did we here? 57.83. Your stops down here at, even if you went at 56.90-ish, you're talking about less than $100 stop range. So, that's a function of Are you trading on margin with leverage? What's your account size? What's your risk tolerance? Those are particulars to the individual trader. So that's a trade. If it gets stopped out, then maybe something else is happening, right? So it's just if I get stopped out here, does that hurt me? No. Does it disappoint me? Sure. Nobody likes to get stopped out, but I just accept it and just roll with it and go, okay, that's part of trading. So that count is wrong. So what else could be happening? What else could be happening? Is this too much? Trying to analyze all this on the 15-minute. Maybe I'll just go to the 4-hour. You got to decide for yourself where you're more comfortable and what kind of time you have to continually be monitoring this, right? The smaller the time frame, the advantage of that is, you can be more precise with your entries and tighter with your stops. But, you may end up with just more trading, which may not necessarily be a good thing. So just a few thoughts to consider, as we see this kind of price action. Don't immediately assume that means, boom, we're off to new highs. Let the market show that to you. All right. That's 20 minutes. All right. I'll wrap it there, guys. This will be up shortly.